Well, with that being said, ladies and gentlemen, our next conversation is going to be a great panel discussion. We're talking about on the topic pioneering a new era, connecting economies with CBDC. And I'm sure a lot of you will take back some insightful sharings from this. Let me now introduce to you the panelists and the moderator who's going to be joining us. For the moderator, it is Mr. Sarker, President, Asia Pacific Mastercard, and the speakers being Shri Suvendu Pati, Chief General Manager, FinTech Department, Reserve Bank of India. We have Mr. Ryosuke Ushida, who is the Chief FinTech Officer, Financial Services Agency of Japan, and Mr. Harish Natarajan, Practice Manager, Financial Inclusion and Infrastructure, the World Bank. Let's heartily welcome them with an iconic round of applause as we welcome our speakers now on the stage.
Good morning, everybody. We have a really exciting topic to discuss of connecting economies with CBDCs. And I've got a very esteemed panel here. Mr. Pati is here from the Reserve Bank of India, who's going to give us a perspective from a regulatory standpoint. Harish is with the World Bank, is going to give us a sense of multilateral agencies. And Ushida-san, who's really looking at FinTech in the Japan market context. And I'm hoping that we'll have a really engaging discussion with the three panelists. And what I intend to do is, if time permits, at the end, probably leave about 5 minutes for Q&A from the audience. This is a big topic. It's getting a lot of attention, and we'd love to hear from you as we progress on the discussion. So with that, why don't I kick this off with the statement that in the year 2023, BIS ran a survey with central banks on the relevance and the importance of CBDCs. And it was very clear, 94% of central banks surveyed said that they were all looking at CBDCs at some level. So this has gone to a very significant scale and relevance. And I think we're all learning in this journey, but you're going to get some real perspectives from the panelists here. So what I'd like to do is firstly kick off with a question to Mr. Pati to hear the India perspective. If connecting economies, if CBDCs have a role to play, what is that role? What's the pain points we believe CBDCs will help alleviate if done well?
Yeah, good morning and thank you for having me here. And it's a great to be part of this discussion, and as it is something futuristic. Let me start by saying that bringing efficiency to the cross-border payment space is a priority which has been well recognized not only by the G20, it's also by the BIS as well as the CPMI, that is the Committee of Payments and Market Infrastructure. So this is a very well recognized priority, and it's something that we need to work together towards. Now, typically, what are the pain points that are associated with the cross-border payments? To my mind, there are 3-4 high-level things that are there. One is the slow speed. The speed of transfer of money from one to the other is really slow. It can be improved, and given the developments in the domestic fast payment systems, this expectation is something that we can look at, and it's becoming real. Second aspect is in terms of costs, the high costs that are typically associated with the cross-border remittances, and especially the number of hops or the additional hops that you create, they add to the layers of cost and number of intermediaries that you get added to the entire settlement process. So cost is something that everybody is well recognized that it should be something brought about to bring cost efficiency. And that's good for the economy, that's good for the businesses, and that's good for the individuals as well. And third thing is what really typically plagues the cross-border payments space is the lack of transparency, inadequate transparency, where the money starts moving from one end, the remitter to the recipient, where exactly the money is lying and where it is featuring, uh, there are still not, despite all technological advances, still there are, issues with regard to that. So in that sense, there are challenges and also the time zone issues, and it's not a 24 by 7 market. There are holidays in between. So some of these things are ripe for innovation to overcome that. And that's new technology in the form of central bank digital currency, which everyone is exploring, does offer some, insights and offers a potential to address some of or most of these challenges. The easily the technological part of the challenges, they are easily resolvable. For example, bringing the time efficiency is easily done. Bringing transparency is also possible, building systems and processes to do the KYC compliance check and other things. But the real issue that needs attention is the on the FX side, the forex part side, which also adds to the cost component. So there are now infrastructure players, there are other intermediaries which do play a role, but we need to look at from a futuristic point of view, is there a solution to address some of the other components? Second issue that we also need to look at whether the wholesale markets, which are generally very efficient, whether we can bring some of those efficiencies in the wholesale market to the retail segment as well, in terms of personal remittances. And as far as Indian context is concerned, India is the largest recipient of the remittances in the world. It's going to be around $125 billion as estimated by the World Bank. So this is particularly relevant for India, not only to improve our, benefit our people, our businesses in terms of making cross-border payments efficient. And in that sense, CBDC provides a very good opportunity to look at that. Some of the, detailed dimensions we can look at in the as we go along. Thank you.
No, thank you, Mr. Pati. I'm going to build on what you just said, and Harish, maybe you can come in on this. The whole concept of connecting economies cannot happen if you're not connecting infrastructures. What's the implications on different infrastructures around the world and their interconnectivity and interoperability? Is shared ledgers, unified ledgers, is that the way forward? What do you see as some of the bigger stumbling blocks that we still need to navigate as a global participant?
Thank you, Ari, and thank you for the invitation to be on the panel. No, I think we need to talk about in different phases, right? So, what is the current state? What is the transition, and what is perhaps a futuristic end state? So, I think we have to look at it in 3 different levels. But of course, in a futuristic state, everybody is talking about a unified ledger, where all forms of assets are digitized, and also the money as part of that. But I think in the transition path, there's going to be a role for all the different infrastructures, which are already there, the domestic payment systems, like fast payment systems and so on. Also the international networks like Mastercard and Visa and others. And of course, alongside that, other infrastructures will develop. Now, I think we need to start distinguishing between a CBDC as a settlement asset, a form of money, a CBDC as a payment mechanism, and the CBDC as a payment infrastructure. So currently, when we talk about it, everything is treated as one. But over a period of time, maybe these functions will be delinked, and there could be other infrastructures in which CBDC could be transacted. And that is, of course, also the vision of the unified ledger. Now, in terms of the challenges in this journey, of course, we need to recognize that people first need to be connected to the financial system to be benefiting from all these different mechanisms which are evolving. And in that, there is a lot of work to be done. As per the global FinTech's estimates, which the World Bank runs, 24% of the adults globally do not have an account, and that number is close to 30% in emerging markets. So I think first we need to solve that problem. And the second is in terms of usage. The usage of accounts is also quite limited. So only about 50% of the adults in emerging markets make or receive a digital payment. So we need to find ways in which the kind of people and small businesses are able to participate in the financial system first. So that's the first order of business. And then the second is many countries are not fully integrated into the global payment systems. Mr. Pati was talking a little bit in that direction. There are a lot of countries where there are problems with respect to the correspondent banking access. So I think we need to ensure that as part of this journey, they are not left behind. These solutions should actually help them and not kind of entrench further their challenges. And then I think the other element is related to the integration of the private payment service providers into this ecosystem. We should not underestimate the role of entities like payment gateways, banks, other payment service providers, who are the ones who ultimately provide the payment service to the end customer. How are they integrated into this global infrastructure as it is evolving, I think is something we have to take into account. And then finally, I think from an interoperability perspective, I think we need to look at interoperability between fast payment systems, and central bank digital currencies. And then, of course, at the instrument level, I think we need to have all the different payment service providers should also be able to connect to these different infrastructures. So that would be my initial point. I will not touch on the foreign exchange issue because Mr. Pati already mentioned, and that is indeed a big point to be addressed.
Well, thank you, Harish. I think you've talked about a number of different asset classes, digital assets, currencies. It's a great time to bring Ushida-san into the discussion. Ushida-san, why don't you give us a little bit of the perspective from Japan? You know, Japan has had stable coins, cryptocurrency. You're also looking at CBDCs. What's your perspective on how this ecosystem is going to evolve?
Sure. So thank you very much for having me. I am Ryosuke Ushida. And then for those not familiar with Japan FSA, we are integrated financial regulators regulating banks, payment service companies, crypto asset service providers, stablecoin service providers, and almost all type of financial services in Japan. But we are unlike Bank of Japan, which is the Central Bank of Japan. So what we are covering is more like private sector side initiatives related to digital currency and digital payment. So notably, we have introduced stablecoin regulation last year, and then we are kind of waiting for the new issuance of JPY or USD denominated stablecoin in Japan. So my point is that this kind of private sector initiative and then CBDC are not enemy to each other. It's more like coexist in the future. So for now, Japan does not decide to issue CBDC, retail CBDC, at least as of now. So it will take at least a few or a couple of years ahead, but we need to solve cross-border payment issues, and we need a kind of digital form of means of payment to settle digital assets like NFT, security tokens, and tokenized bond, whatever. So in that sense, probably something like stablecoin could have a role and to make our financial system better. So we are facing a lot of problems of existing financial system, such as fragmented liquidity of FX markets. So Japan is located in the far east of the world, and the United States is relatively located in the west of the world. So for FX markets, we are both open only for a couple of hours. So that's quite challenging for Japanese banks for liquidity management perspectives. So if we realize something like atomic settlement with smart contract or whatever, we can achieve more better or a kind of a stable financial system in the future. And then going forward, definitely central bank and then private sector work together. And then CBDC could be something like wholesale. CBDC could be underlying infrastructure for the tokenized depositors, stablecoin, or other types of token. So that's a kind of something we are envisioning for the near term, mid term, and then long term. So that's all for myself. Thank you.
No, thank you, Ushida-san. I think you've had some really great opening comments, but I'm going to dig a little deeper. Mr. Pati, if I may bring you into one part of what you said in your opening comments on the cost of FX and what CBDCs can do to minimize. And let me be a little provocative on this. The cost of FX is a foundational element for, if you look at CBDCs, at the exchange of value level, you're still going to look at certain global currencies that you will create as the basis for exchange of value. Now, in the global trade today, US dollar continues to be the most dominant currency, and for a variety of reasons, that's going to remain so for the foreseeable future. How does that exchange work in a CBDC where you're doing a multi-country CBDC exchange, where fundamentally the exchange of value and settlement is going to remain? You can settle in CBDC, but you're going to need a fiat currency that people will hold as reserve. What's your take on that, and how do you see, is CBDC going to really answer the question of FX cost, and in what manner?
Yeah, I mean, it's a question which cannot be resolved through a panel discussion over here. But yes, there are, certainly as a fundamental principle, when you look at the global monetary system and the, currency settlement system, to my mind, there is no gainsaying that that needs to be broad-based first. Then it is also fundamental that given the large number of countries, and if you assimilate, low-income countries, other countries into the global system, it is definitely desirable that there are more currencies available, there are more players available, there are more, so basically what you can say in a sense that democratize that market and remove a little bit of, dominance that is being, observed. So in that sense, it is a desirable goal to pursue and expand that base. In terms of liquidity, there are many experiments which are going on, how that liquidity provision could be made. Starting like there are identified banks on each side, identified banks. There could be a possibility at the other spectrum, one could have the, directly central bank digital currency being a central bank liability, and in all settlements, there cannot be a better anchor than a central bank anchored currency for the settlement. So whether central banks themselves would come on board and provide the liquidity required, if that be a, case in point for bringing efficiency. So there are, and within this spectrum, there are multiple other options which are also getting explored in terms of like automated market makers and things like that. So there are possibilities on both sides. The fundamental idea behind CBDC is that is there a possibility for settling bilaterally, one-to-one, instead of depending on a alternate or a third currency. If their trade balances are, positive or sort of equally matching, then the problems are less. But if there are, trade between those countries are, sort of not matching, then there are other challenges which come into play. Then also within a regional setup, a multilateral setup also can be looked at, where in a multilateral setup, whether this kind of a netting effect could act as a possible counter solution. So there are multiple opportunities, but yes, it is a challenge which is not so easily resolvable. But to my mind, this is something that the entire country or entire globe should work towards, making that space more efficient. And it is in the benefit of all, starting from exporters, importers, and across countries, including the remitters, that we must attempt this. And if technology provides that kind of a solution, like our panelists were suggesting, there are, time zone issues. So if you have a 24/7 CBDC interoperable framework, that takes care of the time zone issues. You don't really bothered about which market is open now and which market is not, and in between the holidays. So those kind of things can be addressed easily. But what that requires is a sort of developing the broad level architecture, interoperable standards, defining the codes, making countries agree to those kind of code standards, developing the appropriate governance framework, the management framework, the rules, and also the take care of the cross-country AML CFT rules across jurisdictions, which could be varying. Third dimension is some of the countries could be fully convertible on the capital account, whereas other countries may not be. So how do you bring in those capital flow management measures into the, again, the interoperable CBDC platforms? But I understand, and there are work is going on. There are technologies available to take care of these issues. But the broader problem or challenge would be, how do we agree upon a common set of standards, goals with regard to the governance framework? So there, the international organizations, I would leave my colleagues, others to, throw some light on that. But from Indian perspective, if there are issues in terms of or challenges for bringing countries on board to such kind of interoperable platforms, we would be happy to provide whatever help is required and provide them with the technology support and other, skill or capacity building assistance. We would be, willing to do that.
Now, Mr. Pati, I think you've made some great points. I think the opportunity to have many currencies as options for settlement is a great idea. You don't need to be beholden to one currency. I really like the point that you made around where trade between two countries, if you've got near matched trade, then there's a clear case for some type of a set-off settlement and a net settlement, basis. And if you look at it, central banks, commercial banks do that even today. They settle their nostro-vostro accounts on a net basis in every market that they're holding currency. So I think that's a practice that already exists. And I think there is some merit to take that into the CBDC discussion. Harish, let me come to you. I think Mr. Pati has raised a few concerns or rather opportunities that multilateral agencies can step in and really help address around standardization, taxonomy, protocols. There's a lot of technology integration for interoperability. What's your take, and where do you see, not to give you homework, but maybe there is work that World Bank, BIS, and others really need to step up to do to help this achieve the desired goal and scale that one wants to see?
Yes, no, thank you. But before I respond to that question, I just wanted to add one kind of a counter perspective to what Mr. Pati was mentioning. Now, of course, countries with bilateral pairs where there's a matched trade, of course, it does make a logical sense that this could be netted off in their respective currencies. But each of the countries might have open exposures with other countries who might want to accept only an international reserve. So that's one of the reasons why countries want to be paid in those international reserve currencies so that they can meet their other obligations. So I think there are complexities there which needs to be factored in. But now coming to the question, now of course there are a lot of international and multilateral collaboration which is required to fully execute and realize the vision which everybody's been talking about in terms of unified ledger and so on. I think the issues are at multiple levels. Firstly is related to the legal and regulatory issues, kind of in terms of what are the jurisdictional boundaries, how are the conflict of law issues, how are they resolved. There are also issues related to the compliance standards. Some of them might need to be updated, modified, adapted to take into account the new realities. For example, one of the reasons for the frictions is related to the compliance checks which need to be done. And for that, there are efforts underway as part of the global bodies to standardize some of the information which is exchanged and in a manner that it can be, the checks can be automated. Right? That is also a big contributor to the speed of transactions. And also in some cases, the denial of service because the information is not adequate. And then there is also efforts required in terms of the infrastructure, what kind of infrastructure is needed, and how do the standardized messaging formats, interoperability amongst the different infrastructures, those need to be addressed. And then there is also issues related to the cross-border provision of payment services. How are those handled? Because ultimately, it is the end payment service providers who are interacting with the customers. So how they are treated in this new frameworks, kind of that also needs to be addressed. Now there are existing bodies which are working on it, like the G20, Saudi Arabia presidency set out a vision for the cross-border payments, which set in train a number of activities. And there are bodies like the Committee on Payment and Market Infrastructures, which Mr. Pati mentioned as part of the BIS, which has historically played a role in terms of setting the standards for the payment systems, and they have a role now in the future scenario. There are also bodies like the Financial Stability Board, which look at the broader regulatory implications. So they are working on streamlining some of the regulatory requirements. There's also the FATF, which works on the AML CFT specific aspects. So there are existing bodies who are enhancing their mandates to contribute to this agenda. And also private sector organizations and private sector associations, they also have a role like the International Institute of Finance, global providers like, of course, Mastercard. They also have a role to contribute to the discussion in developing and shaping these standards.
Thank you, Harish. Ushida-san, if I may ask you a little bit of the perspective. I know you talked about that in this world of diverse currency options, stable coins, crypto, to CBDCs, you did make the comment that one is not the enemy of the other, and you really want to make sure that everyone has a role to play. I'm going to throw in a new twist to it. I know there's tokenized deposits. There's also digital asset per se, where a non-fungible token can be created for any asset. What do you see, how is Japan looking at this and the exchange of value of NFTs and therefore the implications on any type of cross-border exchange?
Thank you very much. So because I want to briefly touch on AML shifty and the financial stability perspectives, because I am engaging in financial action task force and then FSB discussion. So obviously AML shifty requirement is a huge kind of component and for cross-border transactions. And then if we don't have such requirement, our FX market could be much easier, but it's something that we must have. So and now FATF is considering to make a change for the FATF standard recommendation 16, which stipulates what is the transparency requirement for the payment service transfer service providers. So that's, we have a bunch of cross-border payment service providers, not only banks, payment service companies, and then stablecoin providers, crypto potentially as a service providers, but they are all different. But our ML CFT requirement should be same basically because our regulatory objective is same. So despite of some difference in terms of technologies, we have to achieve same goal. That's something an international organization like FATF and the FSB are thinking about. And in this regard, we are having a very, very in-depth discussion with private sectors because we have to understand how current FX market is moving, and its main stakeholder is of course central bank, but also banks, and then SWIFT, and then some other key stakeholder exist, and then we have to bring all of stakeholders together in one place, and then have to think about what is the future regulation, interoperable, and then good regulation that makes sense for both regulators and the private sector players. So that's my comment.
Thank you, Ushida-san. We've got probably about 7 minutes because we want to keep 5 minutes for Q&A. Let me ask a question which any of you can comment. If you believe that we are all on this journey and the human mind makes incremental shifts, we never go, if you look at the history of this world, sometimes it takes 20 years for instant success and we see something emerge. Even AI, I don't want to digress, it's been there for 40 years. It's only achieving scale and success now. If you believe that dictum and you continue to believe that people will innovate, there's going to be a number of blockchains, number of distributed ledgers, there'll be digital assets, tokenized deposits. In this world, as more things proliferate, how do you see exchange of value in a properly authenticated way will happen while we look towards that possible end goal that there might be one unified ledger at some stage to bring it all together? Any of you can comment.
If I may, first, yeah. So we are an observer of one of the unified ledger project called Global Layer 1, led by Singapore MAS, and then our big banks, and then some regulators, central banks, and then BIS are joining the discussion to develop, hopefully, a good infrastructure as a unified ledger. But what matters to me is rather than having an actual single ledger for everyone, but what matters is to develop a standard for this ecosystem, because we need a token standard, messaging standard, and then some technical specification, and then likewise we need a regulatory standard to some extent. So what is the requirement for MLKYC for this kind of digital asset ecosystem? So that's something we have been learning by working together with banks. So both regulators and banks are learning each other on what we can do possibly. And then it's a basically private blockchain, consortium blockchain, but of course, innovation should come from something like, Bitcoin network or Ethereum network, because it's an open source ecosystem, and then there is some, flexibility to do something new, unlike, banks and then regulators operating blockchain. So I believe this public blockchain ecosystem and then private or regulated blockchain ecosystem should coexist, and then what matters is interoperability of these different worlds. So that's why we need this kind of multi-stakeholder discussion.
Can I go? Yeah. Yeah, these things are being talked about now, and I am an optimist in that sense, and would like see things move towards that direction at some point of time. And I also would like to believe that it's no longer a question of if, it's a question of when. And on asset tokenization, things are, moving fast, and we can see some real, use cases coming up very quickly. And for example, we also should look at this as a means of bringing efficiency. Again, you imagine a ledger where both the asset and the funds are on the same, and the settlement becomes very easy, instantaneous, and you leverage the benefits of smart contracts and things like that. As far as unified ledger, and cutting across segments, let's say capital market, insurance market, or even the financial money markets, that's probably a very, very difficult thing to aspire for, but nevertheless a good aim. But what alternately is being talked about, you can have different systems or ledgers which get connected to each other, and that's what is being probably talked about in the FinTech. So that is something which is probably looks more realistic. And instead of moving everything onto an entirely new system, have a balance between the individual ecosystem systems connect with each other and talk to each other. That's looked like a more approachable or a practical way of looking at it. And while we are sanguine and optimistic about that, let me caution on the side of, because these would be the real transactions that would be taking place. And it's not like you are doing an experiment or doing some project within a regulatory sandbox. So there are legal changes and regulatory changes that would be entailed. And that's something which would be really to give them legitimacy, give them the credence that they are real assets, and who is the identifier, who is the owner. And so in that sense, bringing about the legal changes on bringing uniformity across, giving legitimacy to these systems, that looks a little more challenging to me at this point in time. But yes, as people realize the benefits, probably things would move in that direction. So let's end on an optimistic note.
Perfect. Harish, over to you.
No, I think I should have, in retrospect, I should have left Mr. Pati go in the end, because we should end in a note of optimism. But having said that, I think the question of when is the when can be pretty long, right? And then also when in terms of which assets, they could be at different points in time, as I think a colleague from FSA was mentioning. But I think and then there are laws of physics, yeah? Inertia and all of that. So I think we need to prepare for a world in which there will be a pretty long transition path. Some assets could move quicker, some countries could move quicker, but there could be a long tail which will take over a period of time. So I think it is important to look at the transition mechanism. How would you ensure that there's a bridge between the current system and the future system. So for example, if you look at the securities market, in many countries over a period of time, securities were dematerialized, right? But it took some time for everybody to move to the dematerialized format, and there were some transition paths available. So if you do not do that, then of course it disrupts the markets, it also disrupts individuals and communities. So I think we need to provide for that. And it is on that point that I will let it rest. But at the same time, of course, kind of having the sense of optimism that this is some desirable goal to which we should all work towards.
Well, thank you, Harish. I think before we open up for Q&A, if I may just share a little bit, and I know you alluded to Mastercard, Visa, and others, I want to give you a little bit of perspective on how we see it. This is a journey, as I said, and as we all agree, we're all kind of learning as we go along. We do see a world that you will have multiple blockchains, multiple digital assets, and NFTs, and the exchange of value. Mastercard believes that there is a clear role for a multi-token network, which we can intermediate in the middle between two participants. We've just done a pilot out of Hong Kong where we've actually traded carbon credits, and we've moved carbon credit from the seller to the buyer. And that exchange, the multi-token network does not in any way hold the carbon credit. The carbon credit is a ledger entry in the exchange itself. However, the exchange of value, today we are enabling through fiat currency settlement. If there's a CBDC, that could happen, and therefore atomic settlement happens. As Mr. Pati, you said, if there's a ledger that is, if the asset and the currency is on the same ledger, you can enable an atomic settlement. So I think these are all steps in that direction, but I think there's still lots to learn, lots to standardize, lots to make sure by way of multilateral agencies and others to help support. I always use this example that in the 50s, there was this whole WTO and ICC coming together to solve the bill of lading challenge. And if you see how world trade has moved, the standardization of bill of lading on exchange has been a fundamental enabler for global trade. And I think there will be something of that nature needed as far as CBDC and digital asset engagement in global flows is concerned. So on that optimistic note, we have about 4 minutes. Why don't we take some questions? Go ahead. And please you can address it to any particular speaker on the panel. Yeah.
Hi, my name is Nivas, and this question is to Mr. Pati. With coexistence of commercial money and CBDCs, we're talking about three parities: exchange rate parity, purchasing power parity, and settlement parity. My question is, will the amount of circulation of CBDCs versus the amount of circulation of commercial bank money, they are unequal. So will there be a 1:1 conversion, or will the commercial banks get a free run of creating as much money as they want, and there will be an equivalent amount of CBDCs in supply to match it up, or will there be a break between the chain? I'm trying to gain some insights around this.
So not very clear, but whatever I understood is, see, at this point in time, in Indian context, CBDCs are, a design principle adopted is that they are non-remunerative. And so they are at par with the fiat currency. So, and there is two-way fungibility available. You can convert your fiat currency to CBDC and CBDC back to the fiat. So why this is done as a principle is with regard to avoiding the risk of bank disintermediation, the flight of deposits from commercial banks to other wire. And this is a very conscious move, and therefore in that sense it is non-remunerative. And secondly, in Indian context, we are viewing CBDC at par with equivalent to a physical currency, which also doesn't earn any interest. So in that sense, the parity is there, and in the foreseeable future, this is the stance that is going to be taken as far as we are concerned. There are some countries we may look at making CBDCs remunerative, then the play changes completely in terms of monetary policy and other consequences. But as far as this is concerned, they should be treated at par.
Just a small follow-up question. If it's at par, what is the point of retail CBDC? And having two forms of money, what is the point of having two different things? Like, what's the difference?
So that's again a bigger debate, larger debate. Uh, yes. So it is like we are seeing this, digitizing the cash. It's cash but digital in the Indian context. And unlike, in other countries, there is no, they try to bring CBDC to improve the payment systems. But India, we do have efficient payment systems. Our priorities are on typically 2, 3 areas. With regard to how do we bring efficiency to the currency management system or the cash management system, which typically involves creating and printing currency, distributing them, salvaging them back, and then, so if we convert the cash into digital, then the entire game changes. There is a lot of reduction in cost and efficiency. Second point is bringing efficiency to the cross-border payment space, which is the theme for today's discussion. This is where this has a potential to bring efficiency. And third is, of course, getting the country as a future ready. Somewhere down the line, everything is going or transforming to a digital space. So get your currency also get digital and benefit the full potential. Also, there are other attendant benefits like financial inclusion aspects, those things. So there are multiple aspects of this, and so in that sense, it offers a lot many other powerful tools in terms of programmability. As we can see some of the, you can visit our stall and see some of the use cases that are being attempted. So there are multiple other opportunities which are typically associated with a CBDC, like instant settlement and all those things. We can have a separate session or a discussion on that.
Thank you, Mr. Pati. I know our time is up. I want to thank the panelists for a thoughtful, engaging discussion.